Welcome back. You're with us on Financial Quotient, and this time we are looking at a checklist that women should really keep in mind depending on which age category they're in and depending on what life stage they're really in. Lakshmi, now I want to talk about women who could be in their mid-30s heading into their 40s, because here is where life is no longer a straight line, and therefore at least I feel that financial planning perhaps also can't be a straight line. I mean, it's not as simple as you get married at this milestone, have children at this milestone, and then you buy your first car and your etc., etc. Given the changing societal equations, what is it that women in this age category should definitely keep in mind?
So firstly, Surabhi, when you are usually in this age group, you have a reasonably good sense on your good grip, I would say, on your expenditure. It's not that early on you don't have, but typically in that age and stage, the variable expenses tend to be way, way higher or than the known expenditure. At this stage and age, maybe you are by and large settled. You could be a homemaker, you could be also a mother apart from being married, for example, so your things are slightly more predictable. I think that is the point and time where you concretize your goals into very, very short term, into medium term and long term. I think that is extremely, extremely important. This may change a little bit if you are a single woman, for example. There is no cookie cutter approach, unfortunately. But at that point in time, the tendency to be slightly more lavish is higher. I'm again not prototyping, but that's typically what we've seen. So I think when you are at that stability stage, when you have control and grip on what your income and expenditure statement is looking like, that is when you are trying to put bulk of your money, which has been invested into the next level. This is the time when you are okay to take risk on your portfolio, but it'll be a combination of moderate to high risk. So early stage high risk portfolio morphing itself gradually towards a moderate to a high risk kind of a portfolio because you're meeting and solving for multiple milestones in your journey.
Okay, fair enough. So we need to sort of moderate the risk levels as well accordingly. Feroze, come in on this. Again, if we're talking about this category, mid-30s going into 40s, early 40s, even in terms of the approach to investments, whether the woman is investing her own money or family money or spouse money, we discussed asset classes, for instance, earlier. What can be looked at? There's also a growing propensity to experiment now, especially if someone has a corpus at this stage. Look at foreign assets, foreign equity, something else, alternates. So given the trends in the market, what would you advise?
See, I think investing into fancy stuff has not been profitable. There's data which says so. As a lady, if I was a lady, how I wish, I would get myself distant. I will listen to the music and not the noise. Okay. And it's not about what I invest in. Do the simple stuff. Complex problems can have simple solutions. Believe that. And who better than a lady to say that? Point one. But there are two things which I think at this age you have to keep in mind and try and do it today. Is firstly, ask yourself if you're a dependent. Find out what is the insurance cover the person whom you're dependent on has for you. Don't be hesitant to ask this question. Let's assume you are a spouse to somebody whom you're dependent on and you are taking care of the children at home. And that's a very, very large role. So it's the duty of the spouse, in this case, the husband, to make sure that he has 10 times his salary as his insurance cover. If not, get him to buy it this weekend. Point one. Point two, as things progress, you're going to be in the higher tax brackets. Before you get to mid-age of 35, 40, you have to understand the basic 4-5 sections of taxation. So your inclination towards taxation has to be a lot more. If you're a child, like a 20-year, 25-year, just a young lady starting to work, their taxation is not the prime importance. Now, investing has 4-5 important sections. I'm not speaking of the Section 80Cs of the world, which are spoken about so much. So increase your interest in tax. Make sure that you are covered or covering somebody else if you have dependents like your children or anybody, parents. So that's my advice to this age group, and these two have to get done, to my mind.
Okay, extremely pertinent points. We've unfortunately run out of time, but I think we've only scratched the surface. So maybe I'll try and get both of you back again, because we have to ask more questions on this category and, of course, talk about women who are heading towards their retirement or family's retirement. But I think it's a lot of food for thought. So thank you so much for joining in today. And helping us think about a lot of these important, pertinent questions. Have to wrap up this edition of the Financial Quotient on that note. Thank you very much, Feroze and Lakshmi. And thank you, viewers, for being with us.